Good morning, everyone. Once again, this is Black Forest coming to you with another pre-market analysis video. This morning, we're going to be looking at USDJPY, but before we get to breaking down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here is to find credible Forex content that will improve your ability as a trader. Now, with that being said, let's go ahead and get started. So once again, we're having the battle of the two weakest currencies heading into this week, which is USD, JPY, and both of these currencies have been our two weaker currencies heading into most of our trading weeks for the latter part of uh, February and the beginning part of March. Okay. Now, before we go ahead and talk about the technical analysis, let's go ahead and break down the fundamentals of what's currently going on with the USD and the JPY. Well, first and foremost, both these countries, Japan and America, is suffering from inflation, which is causing a doubt cloud over its economy, which means that no matter how much good economic news comes out, until these countries alleviate their inflation that's suffering, that's making their economy suffer, neither one of these currencies are going to gain any type of significant strength or momentum for any type of moves. That's first of all. Second of all, Japanese yen could take a little bit more of a heavy hit than the JPY due to the sanctions and trade bans being put on Russia, and due to our treaties with America and Japan that's post World War II, they will not be dealing with Russia when it comes to trading. So that can end up affecting the Japanese economy as well, their ability to get raw goods for the goods and services that companies in their country provide. Okay. And another thing we also have to look at is that the USD has been acting as a non-traditional safe haven currency during this whole European conflict. Now, when the European conflict between Russia and Ukraine looks like it can lead to a global conflict, the USD has acted very strong. That's just due because America is the one leading the way against Russia with all the sanctions. The USD is not a traditional safe haven currency, while the Japanese yen is a traditional safe haven currency. So if we were to see a switch from a unstable market to a panic market due to America saying they're going to put a coalition force with NATO to put boots on the ground to intervene in the Russian-Ukrainian conflict, then we will see immediate strengthening in the JPY. But other than that, being that we're looking like we're remaining a European conflict between Russia and Ukraine without no military interventions from no other nations, we're kind of just stuck between an unstable and a panic market. Okay, now let's talk about the fundamentals. Well, really, since this whole tension between Ukraine and Russia has started, we've basically been in an influx of a consolidation period where we're really just bouncing around two major price extremes of 115 and as low as 114. And we're most likely going to continue to bounce up with every time it gets to down here in this region, it's going to bounce up to here. And every time it gets up here, it's going to bounce below. And then we'll have certain extreme periods where it may bounce outside of the norm, as you see going up here and here. Okay, so what we're going to have to pay attention to is the fundamentals to see, are we going to get any type of momentum for trajectory of this chart to move either towards the upside or the downside. Okay, and 9 times out of 10, it's not going to be really which currency is going to become more stronger than the other one, or it's really just going to be is which one is going to be more weaker than the other one. Okay, so if the JPY becomes much more weaker than the USD, then we could definitely see a break above this area here. Okay, that will consistently continue to move up. If we see a situation in which the JPY becomes much stronger than the USD, then we will see a break below this area here before it continues to go down. But for the most part, we're looking like we're just going to be bouncing between this 115 price point and 114 price point, with every time price getting within this region here. Every time price gets within this region here, we're going to go up, and every time price gets into this region here, we're going to go down. That is the more likely of what's going to happen. Until we can get a change in the shift of our fundamentals, either through economic policy or geopolitics, we're just going to be consolidating and ranging real heavy with this pair. Okay, hope that information was helpful for you guys. Happy trading.